Hi everyone and good afternoon. Douglas Jonas here live at the New York Stock Exchange. I'm joined today by a special guest, Ed Coyne, Executive Vice President at Sprott. Ed, I want to start right there. Help everyone understand exactly who is Sprott Asset Management.
Sure. Sprott Asset Management is really an alternative asset manager and really a global leader in the metals and mining market. If you think about who Sprott is and what they focus on, our primary focus is in precious metals and real assets. We've got over 3 decades worth of experience and over $10 billion in assets focused on that space.
So you're here today, something interesting just occurred with Sprott. You've got this physical gold and silver trust listed here on the New York Stock Exchange. Help us understand what occurred there.
Sure. So Sprott's got a legacy of offering physical metal, whether it's gold, silver, or even platinum and palladium, through trust. And we had an opportunity to acquire the Central Fund of Canada more recently. In fact, it started trading yesterday on your New York Stock Exchange. And this is really a combination of both gold and silver. Roughly, it's about 2/3 gold, 1/3 silver today in the trust. And this trust allows clients to own the physical metal directly through the trust in a way that they don't get access to it in a typical ETF. So for clients who want to own the physical metal direct, own it in something convenient like an ETF or a trust, we provide that structure in our new trust, the gold and silver trust, as well as our existing trust that we offer.
So for the former owners, if you will, of the Central Fund of Canada,
yes,
have there been changes? Are there benefits to them? How should they be looking at that transaction?
Sure, there are a few changes. One is the liquidity. Two, because you can take physical delivery of the metal, which we don't necessarily recommend, but the fact that you can do it allows that trust to trade closer to spot price. Prior to the ability of an investor in Central Fund taking physical delivery, it would get to these high and deep discounts quite often. So having that physical delivery component is important. The fact that it's stored outside the traditional banking system is important. People like knowing that they're allocating capital away from the traditional markets. And there's greater liquidity, more marketing, more support, just general more liquidity in the space now for the client.
So I'm looking over your shoulder. We're hitting new highs on the floor of the New York Stock Exchange.
Yes.
Dow I can see is over 26,000 right now.
Right.
How should investors be thinking about the precious metals market given what's happening in the equity side of the business?
Sure. That's a great point because all too often people think of gold versus equities. The reality is it should be gold and equities. If you think about the last couple years, in 2016, gold was up over 8.5% and equities did quite well. Last year, equities hit all-time highs, gold was up over 13.5%. So I think more and more people are starting to position themselves in gold and silver as not a way to combat against equities, but really to complement their equity exposure. So I always like to say gold's the original alternative investment. We think about what alternative investments are trying to do. They're trying to give you a different performance pattern than the rest of your portfolio. And you want that because it allows you to smooth out your return patterns and get you from point A to point B in a much smoother, much more comfortable fashion. And so I always like to say when you allocate capital to gold or silver, or gold and silver through the gold trust, what you're doing is you're allowing your investments to continue to grow, knowing you've taken a portion of that capital out of the market and help dampen some of that volatility.
Ed, thank you so much for sharing your insights on not just precious metals, gold and silver, but everything happening, I think, in that space for all of us. Thank you very much for being here. For those of you at home, thank you very much for joining us for another round of Issuer Insights here at the New York Stock Exchange.